I'm Rob Barnett, Senior Analyst at Bloomberg Intelligence, and today I want to talk to you about our mid-year outlook for the solar industry. First, let's start by taking a review of the first half of the year. Solar stocks declined about 8%. That's based on the median performance of our broad global solar theme basket. Now, I know most investors prefer absolute return versus relative return, but I would note that Bloomberg's broad global world index declined about 21% in 1H. So why did the solar stocks outperform? It's really about the pace of growth, in my view. If you look at my colleague Ginny Chase and her team's outlook from BloombergNEF, they think global solar installations, as measured by capacity, will increase more than 30% this year. Indeed, we see this kind of growth reflected from our broad solar theme basket. We think revenues could top $150 billion this year, and that's just from the listed names that are in our grouping. There are some private players as well, so overall industry revenue a bit bigger than that. Now, if we zoom in on the module makers, the consensus expected growth for 2022 is 46% this year. Now, part of that growth is being driven by that fundamental demand growth that Ginny and her team have looked at, but also by higher prices. So this is for sales that we're talking about here. The only real outlier in the group is First Solar. And if you know a little bit about their history, they've shifted gears a little bit and they're refocusing their efforts to become a pure play module manufacturer. And as new production facilities in Ohio and India come online in 2023 and 2024, we think they're going to get growth back up there, aligned with peers. I think, in our view, this sort of double-digit growth pace can be sustained in 2023 through 2025. Now, near term, though, valuation metrics are a bit stretched versus the broader market. On an EV to EBITDA basis, the companies in our solar theme basket trade at 17x versus about 10x for the broader world index. And this is for the EV EBITDA over the next 12 months. And there's expectation essentially that there's going to be lower profits this year because of supply chain disruptions and the broad commodity rally. Polysilicon, a key input for the solar industry, is up almost 3x. Glass, aluminum, other raw materials used by the industry are also more expensive. This has been a margin headwind for the companies we look at. Now, if you zoom into some of the segments, the solar industry is going to see more profitability in the polysilicon side of the business. Most of those companies are printing money this year, but it's the module makers and some of the other equipment suppliers that are really seeing some of that cost pressure and headwind from inflations, these kind of things. Now, one last idea to leave you with is that if you look out on a 3-year EV EBITDA basis in terms of looking at valuation metrics, the companies in our solar theme basket are much more aligned with the broader world index. This is because there's tremendous expectations for underlying top-line growth within the industry and some sense that margins could improve in the years ahead if we get either some cost relief as the broader commodities either ease, or module makers and other companies in the supply chain will simply pass those costs on to customers. So over time, we see a bright outlook for the industry. If you want to learn more about our view on the solar names that we cover, please visit our dashboard. I'm happy to engage with you individually, so shoot me an IB or an email if you've got questions on our outlook or any of the companies we cover. I hope to hear from you.